Hello and welcome to another 5 Minute Friday. And I think that's my ongoing joke because it's never 5 minutes because, I like to chat. And this week, I couldn't be more excited about my guest. This week, my guest is Patrick Carlisle. Patrick, welcome. Patrick is the Chief Market Analyst at Compass, and he is phenomenal at providing all the statistics on real estate market um, for Compass agents. Patrick, welcome and thank you.
Thank you for the invitation, Tricia.
I'm really, really so excited that you agreed to come here because I get your reports, and when I worked with you, I always loved chatting and we always got on very well. So to actually have you here is like I'm a bit of a kid at Christmas right
Oh,
now.
well, I always loved working with you, which is why I'm doing this, because quite honestly, I avoid these things.
Oh, that's so nice. Thank you, Patrick. I promise it'll be painless.
Oh, yeah.
So, Patrick, how did you become a data analyst? I mean, someone doesn't wake up as a kid and go, "I want to be a data analyst when I grow up." How did that happen?
Not too many. Well, my career started, I was actually a bookstore manager for years, and then I jumped, oddly enough, to high tech during the microcomputer revolution. And then I took off time to go around the world. And when I came back, a friend of mine who was in real estate asked me to join him as his partner, and that was in 1989. So I was an agent in San Francisco for about 11 years. Then I moved into sales management and managed some very large uh, real estate offices in San Francisco. And then I took another couple years off. And when I came back, I did a whole lot of things. I was a designated broker. I was a sales manager. I did training for new agents. I did a lot of operations work. And while I was doing that, it crossed my mind to put a toe in the water of market analytics because there's so little out there that I feel is valuable, straightforward, or even honest. And the analytics are often misunderstood and they're often twisted. And so anyway, I started to play around with it. My initial reports were pretty funky, but it quickly became clear. I was focusing at that time on the San Francisco market. What a huge need there was for analytics that people felt were trustworthy and useful. And agents were very, very excited. Their clients were very, very excited. The media became very excited in quoting my reports. And over time, I started to work more and more on creating market analytics and investigating the different angles I could look at. And then when my last company was purchased by Compass, then I left everything else behind, sales management and contract and risk management and training and all the other things I used to do. And I focused just on market analytics. But now I do it for, instead of just San Francisco, I do it for 16 Bay Area markets, as well as doing a national report for the whole country.
That is fantastic. And I love your journey. I love it wasn't just like, oh, I just like numbers. So, that's what I'm going to do. It's like you did everything and then ended up just wanting to provide a service that no one else was doing, which is the best ever, right?
Well, somehow I've been in real estate for 30, going on 35 years with a few breaks. And I find that over that time, I have come to the point where I know a lot about real estate.
Absolutely. Absolutely.
Especially now in analytics, I spend all my time thinking about real estate and how it works and what the dynamics are and what how trends develop. And also, quite honestly, just trying to make my reports interesting by looking at the market in as many angles as I can think of, as well as bringing in some of the macroeconomic trends that are going on that often have an enormous impact on real estate markets, like stock markets or interest rates, pandemics, and so forth and so on.
That's interesting because I read recently about, I wouldn't have thought of those things, but like that what's happening in China or Greece actually affects our markets. How does that work, if you don't mind, just in layman terms?
Yeah, well, you bring up a great point, and a lot of one of the things I have a problem with the media, though they do use my reports or data points a lot, is often they fundamentally don't understand how real estate work. They don't understand things like seasonality or context or um, but a great example on how all these things, I often think of it as like a acre full of spinning plates, all those plates being economic, political, social, demographic, and now even ecological factors, all of which can impact um, real estate. Can you still hear me? Because it looks like we've frozen a little bit.
Oh no, I can hear you. I
Okay, great.
perfectly.
Okay,
Just your
okay, great.
Wi-Fi. Don't worry. No, you're
Yeah,
good.
okay, good.
No, did I look like I had glazed over? No, I hadn't, Patrick.
No.
Not at all. So
Uh,
if I just ask you, when you're creating these reports, what's important for the market analysis for an agent or clients and the media? I mean, it's not just the same data or the same information is going to be of interest to everybody, right? How does that work? Or what do you feel is the most important?
Well, what I try to focus, so again, I try to look at a lot of different angles because one of the big issues with real estate analytics and financial market analytics is that many people will cherry pick a single statistic that supports their view. Um, supports their view that it's never been a better time to buy or sell, or it's never been, whatever it is. People have all these viewpoints that they're attached to, and they will often pick a very specific data point and treat that data point as if that's the definitive piece of information that proves that their opinion is correct. So I try and look at a lot of different angles because, quite honestly, if something is going on in the market, it won't show up in one data point. It'll show up in a lot of data points.
Okay.
um, so I try to focus mostly on trends because trends kind of show the truth over time. You can't cherry pick a trend line. You can see, so a lot of my charts will go back 5 years, 10 years, or even now, 30 plus years, so that somebody looking at it can get the sense of how the market ebbs and flows and how it changes over time, but where it goes over the longer term. I've heard, for example, people say, well, the real estate market in San Francisco never goes down. Well, that's baloney. I mean, that's just sheer nonsense. It fell 20 to 40% in 2008, 2009, depending on the neighborhood. So I think showing these long trend lines give people a more realistic idea of how the market works. And though I don't spend a lot of time making predictions, people can look at those trend lines to try and make their own decisions based upon their own feelings about what's going to happen in the world, as to whether they want to buy or sell or move or so forth and so on.
I love that. I love the fact that you're presenting the facts, and you guys make of it as you will. Now, I looked at your recent report, your national report actually, and it's exactly as you just said, that your trend lines, you have the curve, going up, and they go way back depending on what stat you're showing. So if you were so some people look at this and they feel, oh my God, I'm so overwhelmed, this is all just data, 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 and I don't
Yeah.
get it. What I love that you do is you always put a little summary or snippet on your stats that gives a little overview. This is kind of what this means. So if you were talking to an agent who wanted to make sense of what the stats and how best to use them, what would your advice be?
Yeah, well, statistics can indeed be very challenging. Um, and trying to understand what they mean or what they signify um, can be challenging. I guess what I say, so first of all, honestly, many agents believe that their job is to convince their clients to do something, to actually convince them to buy or convince them to sell. That's what they feel is their fundamental job. I disagree completely. And in California, of course, agents are fiduciary representatives of their clients, and they actually have a legal responsibility to put their clients' interests above their own and anyone else's. So the first thing and what a lot of agents don't understand is that how much clients appreciate it if they feel that they're being given straightforward, honest information without there being an attempt to convince the client to do something to make the agent money. And most agents, certainly the better agents, are in for the long haul, and developing that relationship with your client over time where they come to actually believe that you have their best interests at heart. If they come to that conclusion, they will never use any agent other than you, and they will recommend every single person they run into who needs help in real estate to you, because people don't expect an agent or anyone else to actually really have their best interests at heart. So when they hear from an agent and the agent says, well, based upon what you say, you may want to, keep this home and rent it out and think about selling it later. Well, most agents will say, oh, you should sell it.
Yeah,
Sell it
yeah.
right now, because that's where I make my commission dollars. So thinking about the longer term. So first I say, leave beside the idea. The only thing you want to convince the client of is that you are the best agent for them to use. Don't try to convince them as to what they should be doing with the biggest financial decisions of their life. Now, of course, our clients want our advice, and they want your take on it. And I would say, try to be as honest as possible in conveying what you're seeing there instead of slanting it one way or another. Besides that, on my charts, I look at a lot of analytics in various places. And one of my issues with many of the charts is they're so complicated, I can't even figure out what they mean. I mean, there are lines going every direction. They're in 6 different colors. There's different axes,
Yeah.
titles.
Swirls.
Yeah, swirls, dots. So one of the things I do in my charts is I typically just put one single data point on, or one form of data on a chart, so that you're not trying to compare this to that or that to this, but you can look at, okay, this is what's going on with prices, or this is what's going on with interest rates, or this is what's happening with speed of sale. And I try and have these different charts so people can still compare them and go, okay, well, when interest rates do this, that can do that, or the luxury market can change in this way. But trying to keep the individual charts very simple and straightforward. However, it is true that to understand any statistic, it does take a certain degree of attention. So though I try and make them as simple as possible, the fact of the matter is you actually have to look at the chart and you have to read the description. And I do try and put a short blurb as to what this statistic actually means and may not mean, and how it might be affected by unusual events, or that it can be affected by anomalous effects. Sometimes you just look at a chart and go, gee, I don't know why the median price jumped this month and fell that month. It's just the way it is. So that's another reason why I try and use longer term trends, because sometimes on a monthly basis, things jump all around because it's just a certain group of homes that sold. And then during that month, this group sold, and they happened to be expensive because the stock market went up, and so forth and so on.
Yeah.
So you have to take some time, um, but
Yeah.
again, I try to keep them simple.
So I know, and you do a great job of that. What I loved about the national report that you put in, it's 95 pages to it. So you're keeping it simple, but you've got everything in there. So just so everybody knows that, like, Patrick sent me some research material, so as I understood the whole idea behind data analysts and everything else. And one of the things that struck me, and I want to make a comment about it now because it loops in everything you've been saying, and that is that statistics without informed context are generally worthless. And I think when you give your reports and they're 95, you can see, okay, this is what the interest rates were doing, this is what things were happening. And then you go on and you look at the demographics and you look at all the other stuff. And I just think this is a fantastic example of what you're talking about here. If you could just, explain that statement a little bit better, maybe, than I am.
Yeah. Well, so what's going on in the market, or what has happened in the market, is, as I mentioned, often impacted by a variety of factors. Again, and they of course, economic factors are big ones. But as you mentioned, something that happens in China can affect the market in the United States. In fact, that happened in 2015. This Chinese stock market crashed. That caused a lot of uncertainty as to what was going to happen in the world economy. That caused the US stock market to go down. And a lot of what, besides all these details, there's a very strong psychological element to the market. Homes are very personal. There's a lot of money at stake. And if people feel confident and optimistic about the future, they're much more likely to go ahead and buy a new home, buy a larger home, buy a first home, buy a second home. If, on the other hand, they suddenly are uncertain or even pessimistic, well, then they have a tendency to pull way back. And the issues of confidence and pessimism and so forth are affected by all these different factors. Wildfires can affect one's confidence in, right now we're in a homeowner's insurance crisis. So again, it kind of goes back to that cherry picking idea. I remember in late 2008. So there was a financial markets crash. The subprime boom had just occurred. And the subprime boom itself is a fascinating topic because it was caused by all sorts of people doing nasty things to make themselves more money. But I remember in late 2008, it was clear the market was shifting. I mean, it was crashing. And indeed, it was the beginning of what we call the Great Recession. And median sales prices in some places fell by 50%. So that's a pretty big drop.
Wow.
Now, whether that's fair market value change is a matter of discussion, because the reason why prices crashed was because people had to sell, and banks had to sell these millions of properties that people had bought that they could never afford in the first place because they were convinced to take out loans that they couldn't afford. So anyway, late 2008, I see some newsletter from some agent, and he's saying, there's no crash going on. Look at this. Telegraph Hill, the median price in last year was this price, and in the last month, it was twice as high. Well, I looked at the statistics, and there had been 2 sales a year ago, and there had been 1 sale last month.
Yes,
So,
that's a great example.
and indeed, the media falls for this all the time because they hardly ever give context as to the quantity of data they're using. And if you don't have the context of, well, how many sales are we looking at? It's hard to, decide whether the conclusion or the statistic is actually correct. And that ties into all sorts of things. I was recently reading an article in the Wall Street Journal, and the article was saying that because interest rates had jumped in the last week, sales volume had fallen from the previous month. Well, sales are based on what happened 4 to 6 weeks ago.
Right.
That's when transactions go into escrow. That's where the heart of sales activity is. So if interest rates changed last week, they couldn't affected transaction activity 6 weeks ago.
Yeah.
And yet, so again, there's that sort of thing of context and how seasonality works and so forth and so on. And when I see the misuse of statistics by the media or by agents, it it often boils down to trying to convince someone to do something, but even when they're not, it's because they refuse to give context of what happened in
Because it suits them.
that month. For example, in Santa Cruz County, they had floods,
Yeah.
a year and a half ago, terrible floods. Well, comparing year over year sales volume to that month, if you don't have the context that you couldn't even drive the streets, well,
Yeah.
then you might think that sales had soared. Well, they didn't say it soar. They just happened to be affected by a one-off event. And one-off events often do impact the real estate market.
Yeah. No, these are great examples and I love them because, you're making so much sense out of stuff that's so difficult for most people to understand. So I love that. Now, I'm going to just turn into something here. So you and I were chatting earlier, and I was talking about how I found the median value of homes not really informative. I preferred average because it gave me a better idea of the market. And you shed some great light on that and an example. And I'd love you to share that with everybody. This is another quote from that document that statistics, including median and average stats, are gross generalities. So just do
Okay.
your thing there.
So first of all, I use both median and average stats depending on the statistic. At each statistic I look at and I try and get a sense of, based on the data source and what the data is, what statistic do I believe is most straightforward and most representative of what's actually going on in the market or what has gone on in the market. For prices, I almost always use median prices, median sales prices. So median sales price is that price at which half the sales occurred for more and half the sales occurred for less. The average takes all the sales and just averages them out. Now, both of them sometimes are similar, but say, especially in smaller markets. So, and this is a real big issue because many markets that you deal with, say in a city or a town, there aren't that many sales. And so that in itself means that the statistics may be less reliable or more likely to fluctuate. But sometimes you'll have a market, like for example, Carmel, which I know you know well, that market is a very affluent market. It's a median-sized market for a city, but it may have its sales prices can range from $600,000, and sometimes there'll be a sale that's $30 million.
Yeah.
Well, if you only have 30 sales in a given month or a given quarter, and one of them is 30 million, that pulls the average price up by $1 million.
Right.
So that's distorting it because next month the $1 million sale won't be there. So suddenly
It's
the average price will fall down by $1 million. It's like, well, what's going on? Well, with the median, a $30 million price doesn't affect things very much. It's just one more sale above the halfway point.
right. And that to me was like a light bulb moment earlier when we were chatting because I always go like, oh, medians, they don't really tell me, what's the market like. But it actually tells you a more realistic view of what, you that market is. And if you're thinking of moving there, I think it gives you a more realistic view because there's lower and there could be way
Yeah.
higher, right?
And
So
that goes back into the issue of them being, generalities. Because, actually, twice in the last week, for some reason, two agents contacted me and they wanted, they're trying to figure out the value of a home now. and they told me what the price was then, and they're trying to calculate what the appreciation rate was for the city or the county or the nation, and so forth and so on. And what they wanted to do, and this is very common, is someone goes, okay, well, the price was a million, for the county was $1 million 10 years ago, and the median price now is 1.5 million. Okay, so for the county or whatever, it was, the price, the median sales price has appreciated 50%. So they go, okay, so my client bought their home for 1.25 million 10 years ago. So that means their home is now worth whatever, 1.75 million
Yeah.
or whatever. It's like, no, you can't do that. Appreciation statistics are just very general indicators of regional change. They cannot be applied as exact measurements to any particular property because every particular property in most of our markets are relatively unique. They're unique in their location and their circumstances and their amenities and what work was done and what has happened demographically and economically in the area. And also it changes according to, well, how did that client buy it? When they bought, did they bid 40% over asking price in an overbidding frenzy to win?
Yeah, that's good.
Or did they buy it off market and got a real good deal? Or did they buy it right after the market shifted down when nobody else was buying and they stepped in and they got it for 20% below asking? Well, needless to say, all those, the circumstances of that specific buyer's purchase will immensely affect how much the price has changed. So right now in San Francisco, we've seen, people who bought during a frenzy, and during the frenzy markets, like they bought homes without parking, they bought homes next to laundromats, and they bought homes and they overbid because everyone was overbid. Then the market slows down a bit, and now not many people want the home without parking, and they don't want, to be next to a laundromat and so forth and so on. And so their price change over that period, or even possibly a price decline, could be radically different to what's going on in the county as a whole. So one of the things I often say about real estate is the devil is in the details. And in real estate, there's a lot of details about each specific property. And if you want to figure out what a property is worth now to the best of your ability, because you'll never know until you put it on the market and expose it as widely as possible to as many buyers as possible. But if you're trying to figure out what you think the fair market value is, really yes, you look at the statistics, and yes, you look at the trends, you go, okay, well, prices have gone up and looks like they've gone up substantially. But ultimately, you have to do a specific comparative market analysis, looking at specific comparable sales, specific comparable listings, looking at listings that are comparable that didn't sell, that got expired, and looking at listings that are currently in escrow. And it's not an exact science. It'd be nice if you could just, feed this data into some machine and it would spit it out. You're constantly weighing up these different factors because your comparable sale is often similar, but it's not exact. It's a little bit bigger, or it has a better view, or it has one less car parking. So, but that's where you have to dive in. You look at the statistics and the trends, realize that they're generalities that probably apply to some degree to your property, but ultimately you have to dive into the details of your very specific property and where it's located and what's going on there.
Yeah, no, that's absolutely fantastic. And of course, CMAs are just so useful and so well used. Real estate agents just, it's second nature now that they use them.
And one other thing I say is because sometimes one is dealing with a property and it's like, wow, I can't find anything
Yeah,
that has sold within the
yeah.
last 2
I actually have
years or
clients
since the
with that
market shift.
exact
Yeah,
problem. Yeah,
it's not uncommon because so many properties are relatively unique. And this, of course, this is often the case, especially in luxury properties, which can be very unique. And then I always advise, find that group of agents who work in your area, who you respect, and get their opinion, get a pricing opinion from them. And do it individually if you can, or you can walk them through as a group, but
Yeah, yeah.
talk to them individually so they're not influencing each other and see what they say. And it may be a wide range, but it's more data. It's more data from people who you respect, and it can be helpful.
That's great advice, Patrick. Absolutely brilliant advice. And I have to say, I could stay on here all day chatting. And those who know me probably go like, please, Tricia, it's supposed to be 5 minutes. It's like, yeah, I know. So I'm just going to wrap it up with one thing. Before Patrick came on, I asked him if he would give a projection of how he saw things happening, in the future in the market. And you immediately said, no, sorry, I'm not doing that, and that's fantastic. I just want to get a quote here from the article that I was researching before I spoke with you. And I think it really resonates with you because you are an incredibly humble person. And what I want to just read out here, it says, most reliable experts are also the most humble people who constantly double check and question their own conclusions. The more confident or arrogant a pundit is about what it is to come, the more you should distrust their opinions. I just think that for me was like, whoa, because everybody wants to use stats to tell you what's going to happen, but you're the opposite. And I love that.
Well, we all want to know what the future is. I mean, human beings have wanted to know what the future holds for tens of thousands of years and have tried many methods, from looking at the birds in the sky to looking at the gizzards of a chicken, or it goes on and on and on, or hoping that somebody in a cave will tell them. And that has never, that's a fundamental part of human psychology. We're really desperate to know what's going to happen tomorrow.
Mhm.
Um, you know, and I get that. And I think there are a lot of analysts who make their predictions who honestly are doing their best to come up with what they think is going to happen, though they often pose those predictions far too confidently based upon what their ability is. I've never found I've had an ability to predict the future, as my stock portfolio will attest. Um, and honestly, though, I know there are a lot of very, very smart analysts and economists out there. I've never seen anybody else who can consistently, accurately predict the future. In fact, I don't see anyone even come close. The people who are really trying to push what what they say the future will hold, almost always they're trying to convince you to do something. So again, they're trying to convince you to do something because it's often in their financial interest. Do this now and make me money. Now, they may believe that that's the future, and sometimes it's hard to separate out one's own personal interest and one's straightforward analysis of what's going to happen. Charlie Munger, who Warren Buffett's partner, who recently died, I there was a great quote from him, and this was after the pandemic hit, right after the pandemic hit, and literally analysts were changing their predictions about what was going to happen in the economy, in the world, every day, every day. And it's like, makes me think, it's like, wow, how could you have one opinion one day, change it massively the next day, change it again the next day, and still sound so confident day after day? But Charlie Munger said, a very short quote, he said, everybody says that they know what's going to happen. Nobody knows. Now, that was in a particular time where of huge uncertainty,
Mhm.
but it still applies because there's always so many things going on. Wars can break out, pandemics can break out. You know, who knew interest rates were going to double in 3 months? Nobody that I knew of. Who knew that, there'd be a gigantic fire in this county, or a flood, or on and on and on. Nobody knows these things. They're impossible to predict. So anyway, As
I just love that quote, and I love how honest you are, and I
oh,
really
well, I try.
no, you really are, and it's like you're not arrogant or anything, and like you're just incredibly smart, helpful.
Oh, well, that's kind of you. I certainly have my share of mistakes, but I do try. It's what keeps it interesting for me is that I'm not trying to find data that substantiates what I believe. I'm going into the data because I'm genuinely interested. Gee, what am I going to see now? Am I
Yeah,
going to see something that surprises me? Am I going to see something out of left field or an angle that I've never thought of before? Or maybe some new angle has entered the market that never was there before. And that's what keeps me looking at
keeps you going.
all these spreadsheets and keeps it interesting.
So to wrap up, now that you've said it, what has surprised you in the last year or so? Anything that you go like, that was a
Okay,
surprise.
well, sure. Well, we all know interest rates doubled about 2 years ago and had a massive impact on the market, and had a massive impact in some very surprising ways. At first, the market plunged, but then we had what was called the mortgage lock-in effect, which we've never seen in history, i.e., sellers refused to sell because they had 3% mortgages and they didn't want to sell their home with a 3% mortgage and go buy a new home and get a 6 or 7% mortgage. So that was very unexpected. And that reduction in the supply of inventory actually more than compensated for the reduction of demand. So nationally, prices have continued to go up,
Yeah,
which very, very odd.
yeah.
And then just in the last 6 months, interest rates have stayed relatively high, but the stock market went bananas about, well, about 8 months ago at the end of last year. I mean, just absolutely crazy. So that came out of nowhere and has caused the household wealth of especially people who are already relatively affluent to go through the roof. Their stock market values have gone through the roof. So suddenly they feel a whole lot richer and they feel a lot more confident. So they've dove back into the market. So it's very odd, for example, and then we have what's called the AI boom,
Mm,
which seems to be starting in a few markets in the Bay Area, but not in others. So suddenly, in some markets, we have prices that are higher than ever in history, even higher than the peak of the pandemic boom, even with interest rates 2.5 times as high. So affordability has shrunk, and yet prices have only gone higher. That's kind of mind numbing. You rarely see affordability plunge to the degree it had because of interest rates, but prices continue to climb to ever new heights, like we've seen in Silicon Valley, for example. Part of that is that many of those people have so much wealth in stock market now that they're paying all cash and they don't care about interest rates. So again, a lot of weird dynamics that it's like, wow, I didn't see that coming. I wish I could have. I would have bought stocks last October, but
yeah.
I didn't.
Exactly. Oh, that's fantastic. Patrick, thank you so much. I am so thrilled to have you on today. Hopefully, you'll think about coming back again if I haven't scared you off too much.
Well, if I haven't, out talked myself, I see. Once you get me talking,
But I love
it's
that.
hard to shut me up. So anyway, it was a pleasure, Tricia. I look forward to. Well, I probably won't, I'm not sure if if I ever have the courage to watch myself speak, but
I
please
try
send me
not.
the link. I would love to
I
if I
try
think
not to watch myself.
yeah.
Patrick,
Okay,
thanks again.
great. Bye bye.